Welcome back to AI Research. Looking at this 25-year chart of the German DAX, it's clear we aren't just looking at a stock index. We're looking at the history of global trade. Germany is the world's factory. When the global economy hums, this index climbs. When there's a supply shock or a trade war, the DAX is usually the first to feel the chill. Let's break down the tape of truth across these major turning points. The breakdown. 25 years of the DAX. 2000, the tech bubble bursts. The millennium started with a massive valuation reset. Germany tried to launch its own version of the Nasdaq, and the hype went vertical. When the realization hit that many of these tech firms weren't making money, the bubble burst. The DAX fell nearly 70%, a brutal reminder that gravity eventually applies to every stock. 2008, the credit freeze. This was the great financial crisis. It started with U.S. housing, but it paralyzed German industry. Why? Because the DAX is made of companies that sell expensive things, cars, chemicals, and heavy machinery, on credit. When the banks stopped lending, the orders stopped coming. The floor fell out. 2015, the China panic. By 2015, the DAX had become a China proxy. When the Chinese economy showed signs of a hard landing, the DAX dipped sharply. Investors realized that if China stopped building and buying, Germany's export engine would stall. This was the market pricing in a cooling of the world's biggest customer. 2018, Trade War 1.0. This was the year tariffs became a daily headline. Under the first Trump administration, the threat of 25% taxes on German cars sent the index into a 20% dive. Uncertainty is a market killer, and back then, no one knew if the global trade system was about to be dismantled. 2020, the pandemic flash crash. The fastest crash in history followed by a V-shaped recovery. The world shut down, the index plummeted, and then something amazing happened. Governments and central banks flooded the system with cash. The market decoupled from the reality on the ground and rallied on pure liquidity. 2022, the energy breakpoint. In 2022, the German business model actually broke. When Russian gas was cut off, energy prices went vertical. If you're an industrial giant like BASF or Volkswagen and your power bill triples, your stock takes a hit. The index dropped 25% because investors feared Germany could no longer compete without cheap fuel. 2025, Trade War 2.0 and the pivot. Now, look at 2025. Trump is back, and a 25% tariff on all EU goods is on the table. But notice the record highs. The index has shifted. It's no longer just about cars. We are seeing a massive defense pivot. Companies like Rheinmetall are leading the charge as Europe scrambles to arm itself, while Siemens Energy is soaring to power the AI revolution. The new DAX is learning to grow even as the old economy struggles. Investor insights, the takeaway. The index is not the economy. Germany's GDP is stagnant, but the DAX is global. These companies make their profits in America, India, and Southeast Asia. Don't let local headlines scare you off a global index. Defense is the new growth. For 20 years, defense stocks were ignored. In 2025, they became the market leaders. In a world of trade wars, security is the ultimate growth sector. Pricing power wins. The winners in this tariff environment are the companies that can raise prices without losing customers. This is why software and specialized engineering are outperforming traditional manufacturing. The bottom line? The DAX has moved from being a China play to a security and AI infrastructure play. The players have changed, but the volatility remains the same.